Hey guys, Mike here. Want to talk a bit about Teva. I put a couple of hours into looking at the most recent results, and so I thought I'd just share them quick before the stuff fell out of my head. I don't own this stock, but I know that some people who watch the channel are interested in it, so just thought I'd give you my thoughts real quick. And just quickly, this is not investment advice. I'm just a guy and shouldn't invest on YouTube videos. Okay, so looks like they've settled with 49 states in the opioid litigation, which is great. That's one of the ones I was watching. I was expecting it to actually push the stock up, but it looks like it hasn't done that. But anyway, that's one of the big black clouds out of the way, almost. So that's great. The net debt is down to 18.4 billion on at about 4 times EBITDA. So they've really done a great job here at knocking back the debt. And they've put their 2027 goals out, and their new goal is to be at 2 times debt to EBITDA, net debt to EBITDA. So that means that they're just going to keep paying down debt. That's what it looks like to me. So they get about $2 billion a year in free cash flow. So that means that if they can knock the debt down by another $6 billion and then get EBITDA up to $6 billion, that would put them at 2 times. So that's like 3 years worth of free cash flow. And if the EBITDA goes to 5 billion instead, doesn't go up that much, then it would take them like 4 years to get it down to about 10 billion net debt. So no money coming for shareholders in the form of dividend, which I thought might be a catalyst, but looks like it's not happening. The other one is the other key thing is growth. And so that seems like by deduction, this is the one that everybody's waiting for. The analysts in the call they were just asking about growth and Humira. That was all they cared about. So maybe that's an indication of the sentiment in the market. So speaking of Humira, the news came out, I think yesterday, that they have had a setback in the release of this product. So I didn't really get into it. I didn't look too deeply into it, but it looks like a facility problem. And if it's just a facility problem, then they have to make changes to their facility. So that's at first glance that looks temporary, which is actually, I think, good because the stock just got nailed today. It's the 14th today of April, and if it's a temporary problem, then when they fix the problem, then the stock should react in the other direction. So, but right now it doesn't look like there's a timeline. But this was one of their big releases coming up. I think I think Humira sales are like 17 billion a year. So this is the biggest. Teva was saying this is the biggest biosimilar release, I think, of all time. Maybe I'm getting that wrong. Tell me if I'm wrong, but I think that's what I read. So that's a big deal for them. Maybe it's going to hurt their growth projections for the year, which look like at midpoint their outlook was about a 2% growth rate. So, not great already, but that's better than they've been doing. 2% growth is actually good for these guys. So we'll have to see how that plays out. I'm not sure how big a hit the Humira thing is going to be. But if they can do 2%, that's actually quite good for Teva. And I think the wild card here is the currency, because the US dollar was really strong last year, and it hurt their revenues, and basically it hurt all their numbers, and revenue to the tune of about, I think it was 780 million. And right now it looks like it's going in the other direction. So as the US interest rates come down, the US dollar is coming down, and that might actually put a bit of a tailwind behind Teva's revenue numbers. So there's a possibility of a surprise here this year, just based on the currency. What else am I going to talk about? Okay, so just generally, Europe looks not bad. It looks like they're pretty strong now. I actually can't remember. The operating margin is up quite a lot this year. Let's see if I can pull it up. Oh, it's up to 33% from 25% last year. So that's a big move on operating margin. That's good for them. They're actually having some success. But on the other side, in North America, their generic segment just continues to crumble. And I don't know where the bottom is on that one. They don't really talk about it. You know, they don't really give any guidance on what that's going to look like. So that might be a problem if it just keeps going like that. They did say there's a lot of competition. On another front, I don't usually talk about their pipeline. They didn't really say much about it in my other videos, but I mean, Austedo is quite good. I think they're anticipating 7. That's not the pipeline. That's a new drug, but they're anticipating up to 1.2 billion in 23, which is up from just under $1 billion last year. Looks like just great growth. Looks like the way they talk, there's a huge market for this that's sort of untapped, and they do seem to have a patent up till 2036. So this could be the blockbuster that they need to replace Copaxone, which just continues to melt away, which was their big cash cow for a long time. Ajovy looks all right. It's kind of flat revenue growth right now, and that's fine. But they have some other they have some other strong candidates in the pipeline too. So they have a schizophrenia, what's it called? Just a group of drugs geared towards schizophrenia. So they call it franchise, and Humira. And there was another one, but I cannot remember it. But you know, there's some signs of hope here, is what I'm saying, in the pipeline. Outlook is revenue looks okay. Operating income, EBITDA looks okay. It looks like all that's up a little bit at midpoint. But the free cash flow looks a little bit concerning. It's last year was 2.2 billion, and their range is 1.7 to 2.1 billion this year. So that could be a drag on the company and the stock. And within there, they said the components of that decline are the litigation payouts, which is fine. We expect that. Higher taxes this year, which is, I mean, you can't do anything about that. But the concerning one is that the interest rates are starting to bite. So they have 100 million more in financing costs this year, even though they have a smaller debt load. So that might continue to bite. I think they've got 4 billion in debt coming due in the next 2 years, but at the same time, they could just pay that off mostly pay it off rather than refinance it if the rates are too high. So I don't actually know what their goals are, like if they would pay that chunk of debt off so they don't have to refinance it at a higher rate. But anyway, that's one of the problems right now with higher rates. It's actually starting to hit them. Obviously, a company with a lot of debt. And so just my own strategy here is I'd actually consider getting back into this if I saw it, you know, sort of mid 7s, low 7s, because I think that at that level, you can see if you look at the chart over the last few years, basically it kind of bottoms out around there. And and then it tops out, I don't know, $11, $12. And I think there's a pretty good reason for that range. And I might see if I can play that range if it comes down further. Usually after a big move down, it'll continue, but not always. So, but like once it starts to get into the $7 range, then you're like kind of at 3 times earnings, which is a little bit crazy. And then I think you're sort of at about 4.5 times EV to EBITDA. And so that starts looking pretty cheap, even though it's kind of a crap company. But then on the other side, there's a reason for the 11, 12 on the upside, because once it gets there, people think, well, why would this break out and start going up? There's nothing here that looks like any kind of runway for upside. So I might try and play that range if it comes back down. Anyway, I hope you guys enjoyed that. If you're TEVA fans, if you have any comments or things that I missed, let me know in the comments. But thanks for watching. We'll catch you in the next video.